Hello, and thanks for joining us for another episode of Boom and Bust. I'm your host, Tony Clement, and I'm here at the News Forum where all voices matter. Well, with so much going on, I'm glad we have time to catch up with Tom Caldwell again. He's, of course, the chair of Caldwell Securities in Toronto, and he brings a wealth of investment and business expertise. Welcome back, Tom.
Thank you, Tony.
I guess just give us your sense of the economic picture currently.
Well, there are two pictures. There's the U.S. picture and the Canadian picture. The U.S. picture is the economy is doing quite well. Canada also doing reasonably well, but we have cracks under ours in the broader economy. Our resource base is bailing us out for the present. The U.S. is working at pretty well full employment right now. The interesting thing is if we had some bad economic news, the stock market would probably go up, because the concern is with the economy still powering on, particularly in America, that the Fed will continue to raise interest rates. And that's the main thing people seem to be watching these days, the fear of how high they're going to get. For example, mortgages in Canada are now over 7%. So that's
Right.
a whole difference from, say, 2 years ago.
No, for sure. And of course, we just had the announcement by the Bank of Canada, rates stable. Is that what you expected?
Yes, we're seeing some weakness in the Canadian dollar, and there's usually a couple reasons for that. Either an interest rate differential with America, or some fundamental economic problem. I think it's more the former right now, because you've got money roaming the world looking for an extra 0.25% or 25 basis points. So if our rates, if we don't keep track of the Fed, keep track with them, then money flows out of Canada into U.S. dollar-denominated assets. That is particularly the short-term, high-velocity money that roams the world looking for a slight edge. So we're keeping interest rates where they are for the present, but we can't be too far out of step with what the Federal Reserve is doing, or our dollar gets hit.
Right. And so when do they come out with their new Federal Reserve rate?
I don't know. I think it's a couple of days from now, but actually most of the talk has been in Congress right now. So Paul is still talking tough. And I take a little perverse satisfaction from that, because the more he's talking tough, it's as if he's trying to jawbone inflation down and to do something with interest rates. So they're talking tough. So that really leads me to suspect they won't be as tough as they talk. Maybe that's just how I think.
Now, markets, how are they responding? Are they fairly stable these days?
They've been rather weak. They try to rally and then pull back, The concern is still, how high are rates going to go? What will the impact of those rates be on an economy? Soft landing or a recession? And those are still the big things going on. Inflation is still with us, but inflation will always be with us. At some level, it'll always be there. So, but the fear is, how tight are the central banks going to raise rates, U.S. and Canada, which has to follow along at some point in time.
So you may not be surprised, but I'm a little surprised we haven't fallen into a recession. I was expecting something early in the year, but we're doing okay so far, aren't we?
I think we are, in the U.S. particularly, but Canada to some degree also. But we do have to watch. Our American cousins are protectionist, buy American. Ever since September 11th, they're becoming more and more into themselves, more isolationist. And they don't really think of Canada in any size, way, shape, or form. We're not on the radar screen, and we're not on the radar screen favorably, I will tell you that. So we're a bit more vulnerable in our relations with them, which is not a good place to be, than we have been in many, many years. But the economy is still doing well. In fact, I think it's a testament to how our Western economies function, considering the caliber of leadership we have, both countries to some degree. But remember, the United States is bringing a lot of production onshore. They're getting out of China. They're onshoring. So it's a lot of capital investing going on in the United States. It's keeping this economy going. There is expansion and reallocation of production facilities. And these are new facilities that are being built in the United States. Many of them robotic and artificial intelligence controlled. So they won't be as dependent on labor costs. as has been the case in the past.
Indeed, indeed. Well, we're going to have to watch that closely, of course, because it has such a huge impact on Canadian trade and prosperity. We're going to take a brief break. We'll be back with our guest.